I've got a great Australian dollar Japanese yen Forex trade set up for you guys today. Oh, and details about our professional trader series as well. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Weird times we're living in, right? I had to go to the grocery store this week, and it was kind of a strange experience with them limiting the number of people going into the store at one time. I did score some toilet paper, though, so that was good. I promised that we were very close to starting the Professional Trader series right here on Trading Strategy Guides YouTube channel. Well, the time has finally come. We're kicking off the series Wednesday of next week. I'll be doing the trading picks on Monday and Friday and dedicating Wednesday to the training videos. Don't miss it. Today's trade pick is a moving average cross or MAX strategy set up on the Australian dollar Japanese yen Forex pair, and we'll take a look at that in a minute. We've also got an open trade to look at, so that's cool. And later on, today's trading maxim. It's Friday, guys, which doesn't mean anything anymore. Remember to click the subscribe button and hit that bell so you won't miss any of these trade setups. All right, let's take a look at the open trade. Oh, the Dash Crypto setup I showed you Wednesday triggered yesterday right here. And I got in it at 83.0268 with my stop loss down here at 70.2153. and my target at 91.5678. It's looking a little bit sad right now. If this thing closes back below the 77.1350 level, I'll be closing this one and taking the loss on it. Now we wait. We'll take a look at the setup on the Aussie yen in a second, but first I want to tell you that Trading Strategy Guides is offering a special discount on great training from a trader that I look up to, Scott Barkley. Scott will show you what is better, price action or indicators. And this training is only $7, but only for today. If you want to take advantage of this one-time deal, there's a link in the description below. Get there before midnight Eastern Time tonight. Just do it. This is a daily chart of the Australian dollar Japanese yen Forex pair, and it's all set up for an MAX strategy sell signal. If you don't already use it, the MAX or moving average cross is a quick and easy strategy to add to your arsenal. It consists of the 100 period simple moving average, which I've got in blue, and the 20 period exponential moving average, which is purple on my chart. If the 20 EMA is below the 100 SMA as it is here, we only take sell signals. Once the two moving averages are fairly well distanced from each other, then we look for the price to pull back and move up above the 20 EMA like it has right here. Now we just wait for it to move back down across the 20 EMA again, and the sell signal is the first candle close below the 20 EMA. And here's a nice addition to confirm it. As the price moved up, the volume and volatility declined. That indicates that traders are increasingly disinterested in the upward move. And here's the trade plan. We'll sell a daily candle close below the 20 EMA. On the breaking candle, the volume bar should reach up above the volume average right here for a full-size position. If it doesn't quite reach the average but does reach 75% of the average volume, I'll enter a half-size position to reduce risk. You can calculate the percentage by dividing the volume right here by the volume average, and you should get at least 0.75. If you don't get at least 0.75, I would stand aside on this trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So what that means is, when this breaks down here, we get a candle close below that 20 EMA. That will be our sell entry. On that day, take a look down here at the ATR. Multiply that number by 1.5 and measure that distance above the entry, and that'll be your stop loss. Then measure 1 ATR below your entry, and that will be your first target. If after entering the trade, we get a candle that closes back up here above the 20, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below the 20 EMA should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using two positions. The first position has a stop loss and a take profit, and that position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade, and that's the setup on the Aussie-Yen Forex pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims. Things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, another trip back in time for our maxim of the day. Tim's trading maxim number 19. Would you take that trade if your mentor was looking over your shoulder? This comes from our fearless leader, Casey, and he's full of these sayings. I think he may actually have more than I do. Hopefully I'll get brownie points for including his saying in my maxims. Anyway, think about this one. If your mentor is not watching, you can make up all kinds of excuses for taking a trade. But if he or she is watching over your shoulder, would they approve of this trade you're about to take? Does it follow all your rules? And speaking of rules, remember our Aussie-Yen trade plan here. We're going to sell a daily candle close below the 20 EMA. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I'll be sending out 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And don't forget to take advantage of the deal on training. It's good only for today. And be sure to come back next week and we'll begin the Professional Trader series right here on Trading Strategy Guide's YouTube channel. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you Monday.